We are here at the World Economic Forum in Davos, outside the Microsoft Cafe. I'm thrilled to be with Ken Rogoff, author of The Curse of Cash, the former chief economist of the IMF, and of course, Harvard University professor. Thank you so much for joining me.
Thanks for having me.
So one of the things that you've been talking about here, the panel that you were on, is about the next financial crisis. Do you think that we're headed for another financial crisis?
Well, broadly speaking, I think we're coming out of the last financial crisis, and some of the pessimism that had been going on, at least in the academics, was the secular stagnation, we'll never grow again. Demographics, slower productivity, yes, but some of it was the cloud of the financial crisis. 8 to 10 years is the norm after a deep systemic financial crisis. That said, I don't think I'm as complacent as the average here. I can't remember when it was this complacent, maybe in 2006. But that doesn't mean we're going into another financial crisis. I tend to think the big move that markets might not be expecting, and I'm not saying it's going to happen, but that would really, knock people back, is if interest rates started rising faster than the markets have built in. And I don't mean it's because the Fed goes crazy or the ECB goes crazy. I mean, it's because maybe the US and Europe start growing. Maybe they start investing again. Well, that'll be good for the pockets of growth, but there might be other places, Italy, maybe Japan, that aren't growing so well, have a lot of debt, and you could get problems that way. Obviously, the stock market could fall. I mean, obviously. I don't think that in itself causes the same kind of problem. The people here really wouldn't like it, but I don't think it's such a big deal. And then there's China. I mean, I think if you're going to look at a this time is different story at the moment, of course it's China. Very hard to know. I hope you're not in danger there from the snow falling. Maybe it's China where the housing prices are booming, debt is very high. It is different because it's one big organization. They say they can act very quickly. They can stamp out the problems. But I tend to think they're going to have trouble maintaining their growth without some kind of big bump.
And what do you think the probability of a financial crisis is?
Low. I mean, outside of China, if one's going to happen, it's in China. I don't think it's particularly high. Of course, that's probably a leading indicator of what's going to happen tomorrow, but a recession, that's another matter. I mean, a recession, it's certainly a 15 or 20% chance for 2018, and I'm optimistic for my baseline. But stuff happens, and that I don't think you can get any lower than that.
Is there any policy issue that you think is concerning enough that could wreak havoc on the economy?
The thing, honestly, that worries me the most is that, President Trump's coming here, and I think a lot of people, part of the reason they kind of ignore him is, they say, well, he's left the Federal Reserve alone. I think maybe the investors attach too much weight to the importance of the Federal Reserve. But if the Fed's okay, we're not going to worry about this other noise. And I wish he had reappointed Janet Yellen, but Jay Powell's excellent, the person he picked. And the people that he's nominated have been pretty good technocrats. It's been pretty reasonable. But let me tell you, if the stock market falls 20%, and I'm not saying it's going to, but it wouldn't take much to have it fall. It just went up a lot, so it could fall. And if there's inflation this year, and I think there will be with the output gap closing with the fiscal stimulus, and the Fed's going to say, I'm sorry, we don't look at the stock market, we look at prices, they're going up, we have to start raising interest rates. And then if Trump starts undermining the independence of the Federal Reserve, and I don't know if he could keep his hands off in that situation, I think that would really scare the daylights out of investors, and you might see a very big movement in that case.
And do you think there's already more inflation than we're seeing in the inflation numbers?
No, I mean, I don't have any special information. I do hear that about China, that the inflation's much higher than people see. No, I wouldn't necessarily say that, but I do think this year it will go above 2%.
Okay, yeah, that would do something. And you're not worried about QE unwinding and that being the cause for interest rates?
QE unwinding is a non-event. Quantitative easing, if your audience doesn't know what it is, they don't want to. I don't think it actually did that much one direction. I don't think that do that much in the other. It's the raising interest rates. That's what I think we should be worried about.
Right, and 2 years ago, you wrote a book, The Curse of Cash, And a lot of the premise of that is getting rid of big bills, in large part to reduce the amount of tax evasion and criminal activity. And a lot of people might think the solution then would be, something like a cryptocurrency. But you actually addressed this in your book 2 years ago. Can you explain why you don't think Bitcoin is the solution to the $100 bill problem?
No, it's certainly, Bitcoin, it is the solution if you're wanting to launder money or tax evasion. I think the government will eventually have to regulate it severely. And I think someday we'll issue its own digital currency. We have to remember the private sector invented standardized coinage, and then the government eventually regulated it, took it over. Different times, different places. Same thing with paper currency. Private sector invented it, government regulated, took it over. What makes you think it would be different? And the Bitcoin evangelists say, no, no, no. This is a libertarian, they will not touch us. I'm sorry, when it comes to the monetary system, the government makes the rules. You cannot win the game. If they're not winning, they will change the rules. That's what will happen here.
And is that what you think that 10 years from now it looks like? Is that cryptocurrency will exist, but that the government will have taken over?
Well, I think the government will have a much bigger hand in regulating. We will see a new generation that's used for transactions, but not anonymous transactions. That's where I think the government really has to step in. There's some great technologies here, but I think it's a little bit like with the internet, which they say, but it's a little bit like Internet 1.0, and we will see at some point a cryptocurrency 2.0, which is not crypto, it's not anonymous, but substitutes for debit cards, credit cards, cash, makes electronic transfers more secure. I think there are a lot of ideas out there. There are also a lot of people who are rushing to cash in on the craze and just trying to make money. We see it here in Davos. They've quite a presence.
And that might be a hard question to answer because it's hard to understand exactly where all the value in Bitcoin comes from, and it's already come down a lot. But how much of the value do you think will be lost if it loses anonymity and it loses its libertarianism?
So not the whole space, but Bitcoin in particular.
Yeah, but Bitcoin in particular.
I think it's much more likely to be worth $100 than $100,000 10 years from now. I don't think it's going to go to zero because there'll be places like North Korea, maybe even Russia, that, you have all sorts of financial sanctions on us. We're not benefiting from the system. We're going to let people launder money. So I don't think you're going to wipe it out. I think you will have governments use it, but in the mainstream governments, it's not going to be legal in banks. It's not going to be legal in retail transactions unless it's not anonymous. And Bitcoin, it's funny, just the energy that it uses, but it's the anonymity that's really the problem.
And last question, just generally speaking, what do you think that people are missing the most when they're talking about, when you're looking at financial crisis or the markets and everything here, the conversations that people are having?
Well, I think in general, the volatility index, the complacency index is phenomenal. I'm optimistic, but I'm not this complacent like this group. And if I had to put my finger on the thing which really would have people jumping off bridges, it's interest rates going up faster than you think. It absolutely could happen. They're at historic lows, and I think a lot of papers show when this happens, sometimes they go up. It'll hit art, it'll hit the stock market, it'll hit the housing market. Not necessarily the end of the world, but in the places that aren't getting fast growth, it's going to hurt.